You're scrolling through Zillow again. You've been doing this for months now, maybe years. Saving listings you'll never tour. Running mortgage calculators at midnight. Telling yourself that renting is just throwing money away, that you're falling behind, that everyone else figured this out except you. And every month when you send that rent check, there's this quiet voice that whispers, you're losing. You're paying someone else's mortgage. You're building nothing. You're 35, 40, 45 years old, and you have nothing to show for it. Your parents bought their house for $70,000. Your friends just closed on a 3-bedroom. Your coworker won't shut up about building equity. And you're still here, still renting, still refreshing Redfin like it's going to tell you something different this time. You've done the math 100 times. You know the down payment you'd need. You know the monthly payment would only be $200 more than rent. You know the tax deduction. You know all the reasons why this is supposed to make sense, but something stops you every time. And you can't tell if it's fear or wisdom or just one more way you're failing at being an adult. Here's what's actually happening. You're living inside the biggest financial lie of the last 70 years. And the people who sold you this lie did it so effectively that you now do their work for them. You judge yourself. You feel behind. You see renting as failure and ownership as a rival. But let me show you what nobody wants you to calculate. Because once you see these numbers, you can't unsee them. That house your parents bought for $70,000. They didn't just pay $70,000. Over 30 years with interest, they paid $140,000. Already twice what they thought. But that's not the real number. Add property taxes. In most states, that's another $60,000 to $80,000 over 30 years. Add insurance. Another $40,000, and that's if nothing bad happens. Add maintenance. The rule is 1% of home value per year. On a $400,000 house, that's $120,000 over 30 years. Now add the opportunity cost, every dollar that went into that down payment, every dollar that went into repairs, every dollar that went into property taxes. That money could have been invested. At a conservative 7% return, the opportunity cost of homeownership over 30 years is catastrophic. Add it all up, and that $400,000 house actually costs somewhere between $800,000 and $1.2 million over 30 years. And that's if everything goes right. If the roof doesn't fail, if the foundation doesn't crack, if the housing market doesn't collapse the year you need to sell, if you don't get divorced, if you don't lose your job and have to move, if you don't have to help your aging parents, if your kid doesn't need to go to a different school district. You see how many ifs are hiding inside that mortgage? Now run the same calculation on renting, 30 years of rent at $2,000 a month, growing at 3% annually. That's about $1 million. Sounds terrible, right? Except you're not paying property taxes, you're not paying insurance, you're not paying for the new HVAC system or the foundation repair or the roof replacement. When something breaks, you call someone. When you need to move for a better job, you move. When the market crashes, it's not your problem. And here's the part that breaks the entire narrative. You take everything you would have spent on a down payment, on property taxes, on maintenance, on all of it, and you invest it. Boring index funds, nothing fancy. After 30 years, you have more wealth than the homeowner. Not a little more, significantly more. And you had flexibility the entire time. You had liquidity the entire time. You had options the entire time. The homeowner had a house. Now I know what you're thinking. You're thinking about equity. You're thinking about that moment when the mortgage is paid off and you own it free and clear. You're thinking that has to count for something. It does count for something. It counts for a paid-off asset that still costs you money every single month. Property taxes don't stop. Insurance doesn't stop. Maintenance doesn't stop. The house ages. Things break. Costs rise, and you can't eat equity. You can't pay for your retirement with the feeling of ownership. You can either live in the house, in which case it's not generating income, it's consuming it, or you sell it, in which case you're back to renting or buying something else. The wealth wasn't in the house. The wealth was in the forced savings plan that a mortgage created. But you don't need a mortgage to save money. You just need discipline. And if you don't have discipline, a mortgage won't save you. It'll just make you broke in a house instead of broke in an apartment. But here's what nobody tells you about money, and this is where everything you thought you knew breaks down. Home ownership isn't a financial decision. It never was. It's an identity decision disguised as a financial decision. You don't want the house because the math works. You want the house because it means you made it. It means you're stable. It means you're a real adult. It means you can host Thanksgiving. It means you have a place in the world that's yours. And those are real needs. I'm not dismissing them. But you're paying $400,000, no, $800,000, no, over $1 million when you add it all up, for a feeling. That's the most expensive feeling you'll ever buy. The wealthy understand this. The actually wealthy, not the people leveraged to their eyeballs in a nice neighborhood. The wealthy think of homes as either investments that generate income or expenses that provide utility. That's it. If the house generates more income than it costs, you buy it. If it generates less, you rent it. The emotion is irrelevant. But you were taught to think of your home as your biggest investment. And that one lie has kept more people trapped in the middle class than any other single belief. Because here's what happens when you think your home is an investment. You sink every dollar you have into it. You buy the biggest house the bank will approve. You empty your savings for the down payment. You spend weekends at Home Depot. You finance renovations. You pay PMI. You pay closing costs coming and going. And at the end of 30 years, you own a depreciating structure on a piece of land that may or may not have increased in value faster than inflation. Meanwhile, the person who rented, the person you felt sorry for, the person who was throwing money away, they invested the difference. They had options. They could move for opportunities. They could take risks in their career because they weren't chained to a mortgage. They could invest in themselves, in their education, in starting a business. They had liquidity, and liquidity is freedom. The homeowner had certainty, and certainty is a cage. Let me tell you about Sarah. Sarah's not her real name, but she's a real person. She bought a house in 2006. Did everything right, 20% down, good credit, stable job, 3-bedroom ranch in a decent school district. Then 2008 happened. Her house lost 40% of its value overnight. She was underwater, owed more than it was worth. Then her company downsized. She found a new job, better pay, better opportunity, 2 states away. She couldn't take it. She was trapped. She couldn't sell without bringing cash to closing, cash she didn't have. So she stayed in a job she hated, stayed in a house that felt like a prison, stayed in a life she didn't want. She finally sold in 2019. 13 years later, she got out basically even. After 13 years of payments, she walked away with her sanity and almost nothing else. Her sister rented the entire time, moved 4 times, followed opportunities, changed careers twice, built a portfolio of index funds that grew every single year. Now has $700,000 in liquid assets and the freedom to live anywhere. Sarah has a cautionary tale and a lot of thoughts about what she should have done differently. This isn't about one being better than the other. This is about knowing what you're actually buying. When you buy a house, you're not buying an investment. You're buying a lifestyle. You're buying stability and roots and the ability to paint the walls whatever color you want. Those things have value, but you need to know the price. And the price is about $1 million more than you think it is, plus every opportunity you'll turn down because you can't move. Plus the career risks you won't take because you have a mortgage. Plus the businesses you won't start because all your capital is locked in your walls. That's the real cost of home ownership, and almost nobody calculates it. You know what the really uncomfortable part is? You probably already know this. Somewhere deep down, you've always known this. That's why you keep hesitating. That's why you haven't pulled the trigger yet. Your gut is smarter than the narrative. Your gut knows that you're about to sign up for 30 years of obligation to prove something to people who aren't thinking about you at all. Because here's the truth about the pressure you're feeling. It's not coming from you. It's coming from a financial system that needs you to take on debt. It's coming from parents who bought houses in a completely different economic reality. It's coming from friends who need you to validate their decisions by making the same ones. But your life is not their life. Your goals are not their goals. Your version of security might not include being tied to one address for 3 decades. And the moment you give yourself permission to see that, actually see it, not just intellectually understand it, but feel it in your body, everything changes. You stop seeing rent as throwing money away. You start seeing it as buying flexibility. You stop seeing your landlord as getting rich off you. You start seeing yourself as outsourcing property management. You stop feeling behind. You start feeling strategic, because the game you're playing is not the game they told you to play. They told you to climb the ladder, buy the starter home, then the forever home, upgrade every 10 years, die in a house you've paid off, leaving it to kids who'll sell it and split the money. But what if the point isn't the ladder? What if the point is building a life where you have options, where you can say yes to opportunities without asking permission from a mortgage, where your money works for you instead of sitting trapped in drywall and door frames? That's what the wealthy do. They keep their capital liquid. They rent more than you'd think. They buy property only when it generates income. They understand that flexibility is worth more than pride. You've been taught that net worth is what matters, but liquidity is what gives you power. Net worth is just a number. Liquidity is options. And here's what happens when you have options. You make better decisions. You take smarter risks. You don't stay in jobs you hate because you're terrified of missing a mortgage payment. You don't pass on opportunities because you're trapped. You don't spend your 50s exhausted because you spent your 30s maintaining a house. You build the life you actually want instead of the one you were supposed to want. Now let me be clear about something. I'm not telling you not to buy a house. I'm telling you to buy it for the right reasons. If you want a house because you want a house, because you want a garden, because you want to host people, because you want stability for your kids, then buy the house. But know that you're buying a lifestyle, not an investment. Know that it's going to cost you double what you think. Know that it's going to limit your options. Know that you're choosing routes over mobility. And if those trade-offs are worth it to you, genuinely worth it, then make that choice with your eyes open. But if you're buying because you think you're supposed to, because everyone else is, because you're afraid of being left behind, because you think it's the only way to build wealth, stop. You're about to spend the next 30 years paying for a lie. The people who are actually winning financially, they're not doing what everyone else is doing. They're not following the script. They're not buying the biggest house they can afford. They're not sinking everything into one illiquid asset. They're keeping their overhead low. They're staying flexible. They're investing the difference. They're building portfolios, not equity. They're creating options, not obligations. And in 30 years, they're not just comfortable, they're free. You're standing at a fork in the road right now, even if you don't realize it. One path is familiar. Everyone you know has taken it. Your parents took it. Your friends are taking it. It feels safe because it's proven, except it's not proven. It was true in 1985 when houses cost 3 times your annual income and you could pay off a mortgage in 15 years on one salary. It's not true now when houses cost 8 times your annual income and both partners need to work full-time just to make the payment. The world changed, the math changed, the game changed. But the narrative stayed the same, and now you're trying to win a game using rules that don't apply anymore. The other path is harder to see because fewer people take it. It requires you to ignore the pressure. It requires you to define success differently. It requires you to be okay with people not understanding your choices. But that path leads somewhere different. Somewhere with more options, more freedom, more ability to say yes to the life you actually want instead of the life you could afford after the mortgage payment. So here's the question you actually need to answer. Not can I afford this house? The bank already told you that you can. Not is this a good investment? You know the math now. The question is, what do you actually want your life to look like in 30 years? Do you want to own a paid-off house and have spent 3 decades maintaining it? Or do you want to have built a portfolio that gives you options? Do you want roots or do you want mobility? Do you want certainty or do you want freedom? Because you can't have both. And pretending you can is what keeps you refreshing Zillow at midnight, stuck between the life you think you're supposed to want and the one you might actually want if you gave yourself permission. The math says renting is cheaper, even after 30 years, even when you account for everything. But this isn't about math. It never was. It's about whether you're brave enough to build wealth differently than everyone told you to. Whether you're secure enough to ignore the voices saying you're behind. Whether you trust yourself enough to walk a different path. Nobody's coming to tell you which way to go. Nobody's going to make this easy. Nobody's going to validate this choice until you're on the other side of it, looking back. Your move.